While everyone's panicking about Florida's housing market crash, smart investors are quietly identifying the best opportunities of the decade. Not all Florida markets are collapsing. In fact, 3 cities are emerging as powerhouse investment destinations for 2026, offering something the crashing luxury markets can't deliver: actual cash flow, job growth, and sustainable fundamentals. In this video, we're revealing the 3 Florida real estate markets where data shows smart money is moving right now. These aren't speculative plays or hope-and-pray investments. These are markets with diversified economies, strong rental yields, and appreciation potential that defies the broader Florida correction. If you're looking to invest in Florida real estate in 2026, these 3 cities should be at the top of your list. Before we dive into the data, make sure you hit that subscribe button and turn on notifications for housing intel. We separate hype from reality and show you where the real opportunities are. Here's what makes these 3 markets fundamentally different from the crashing coastal luxury cities we covered in our last video. While Naples is down 19% and Punta Gorda is facing a 70% probability of further declines, Tampa, Jacksonville, and Ocala are showing resilience backed by economic fundamentals that actually matter. The key difference? These markets never experienced the speculative mania that drove Southwest Florida prices into the stratosphere. They appreciated during the pandemic boom, yes, but at rates more aligned with local wage growth and economic expansion. More importantly, they offer something investors desperately need in today's market: positive cash flow, even with 7% mortgage rates and elevated insurance costs. Smart money isn't chasing appreciation anymore. They're chasing sustainable returns. They're looking for markets where the math actually works, where rental income covers mortgage, insurance, taxes, and maintenance, with cash flow left over. They're seeking cities with diversified economies that won't collapse if one industry struggles or if wealthy retirees stop buying second homes. Let's break down exactly why Tampa, Jacksonville, and Ocala are attracting sophisticated investors while others flee Florida entirely. Market number 1. Tampa. Tampa stands out as the most solid opportunity for intelligent investors heading into 2026. This isn't speculation. This is backed by economic fundamentals that separate Tampa from the crashing coastal markets. Tampa possesses a truly diversified economy, with major corporations like Raymond Financial and Publix supermarkets anchoring a robust job market. The city is projected to add more than 50,000 new jobs by the end of 2026, according to regional economic development data. That's not seasonal tourism jobs or construction work that disappears when building slows. These are permanent positions in finance, healthcare, technology, and corporate services. Here's where Tampa gets really interesting for investors. Rental yields range between 8 and 12%, significantly superior to the state average of 5 to 7%. Let's put real numbers to this. A $400,000 investment property in Tampa, generating $3,000 monthly rent, produces a 9% gross rental yield. After accounting for property management, insurance averaging $6,000 annually, property taxes around $5,000, and maintenance reserves, you're still looking at positive cash flow of approximately $400 to $600 monthly. That cash flow profile simply doesn't exist in Naples or Miami anymore. Insurance costs in those coastal markets have destroyed the investment math. Tampa, located on the bay, but with less direct hurricane exposure than Gulf Coast cities, maintains more manageable insurance premiums while still offering Florida's tax advantages and lifestyle appeal. Tampa's appreciation rates have consistently outperformed state averages. Median home values increased 18% year over year compared to 12% for Florida's overall average, according to recent market analyses. But here's the critical distinction. Tampa's appreciation is driven by actual demand from people moving for jobs, not speculation from wealthy second-home buyers who disappear when markets turn. The Tampa Bay area added over 100,000 residents in the past 3 years. These aren't retirees who might leave if insurance gets too expensive. These are working professionals in their 30s and 40s taking positions at growing companies. They need places to live, and many prefer renting initially while they assess neighborhoods and schools. Tampa's rental market shows remarkable strength. Vacancy rates remain below 5% in most submarkets. Days on market for rental properties average just 10 to 15 days. Rent growth continues at 4 to 6% annually, well above inflation, providing built-in cash flow increases for landlords. The city is investing heavily in infrastructure. The downtown waterfront redevelopment, expanded Riverwalk, and new mixed-use developments are transforming Tampa from a sleepy bay city into a legitimate metropolitan destination. Companies are relocating headquarters here specifically because of the talent pool and business-friendly environment. For investors, Tampa presents the rare combination of current cash flow and future appreciation potential. You're not buying and hoping. You're buying a cash-flowing asset in a growing market with strong economic fundamentals. That's what smart money looks for in 2026. Market number 2. Jacksonville. Jacksonville offers superior cash flow returns for investors focused on consistent rental income. This is Florida's most undervalued major market, and sophisticated investors recognize the opportunity. Let's look at the actual numbers. A typical rental property generating $2,200 monthly on a purchase price of $320,000 produces approximately 8.25% gross return. After expenses, you're still achieving 6 to 7% cash-on-cash returns, which is exceptional in today's elevated rate environment. Jacksonville's median home price sits at just $282,000 according to Redfin data. That's 46% less expensive than Tampa and 63% less than the state median. This affordability creates a massive advantage for investors. Lower purchase prices mean smaller mortgages, lower property taxes, and more room for cash flow even with insurance and maintenance costs. But Jacksonville isn't cheap because it's undesirable. It's affordable because it never experienced the speculative frenzy that inflated prices elsewhere. The city is among Florida's fastest growing in terms of investment returns, not just population growth. That's a critical distinction. Population growth alone doesn't guarantee investment success. Jacksonville delivers actual financial performance. The Florida real estate market forecast for 2026 projects that Jacksonville will significantly benefit from continued migration from higher-cost northeastern markets. New York and New Jersey residents are discovering they can buy twice the house in Jacksonville for half the price, with no state income tax and a dramatically lower cost of living. Jacksonville's economy is remarkably diversified. The city serves as a major logistics and distribution hub with the largest deepwater port in the southeast. Financial services, healthcare, and military installations provide stable employment that doesn't fluctuate with tourism trends or real estate cycles. 3 Navy bases in the Jacksonville area create consistent housing demand. Military families need rentals during deployments and relocations. This built-in tenant pool provides stability that purely civilian markets lack. Military housing allowances also support rental rates, providing a price floor that prevents rents from collapsing during economic downturns. Major infrastructure projects signal long-term confidence in Jacksonville's growth. The $176 million I-10 expansion and the $1.4 billion NFL stadium renovation indicate both public and private sector commitment to the city's future. For investors seeking predictable cash flow without the volatility of coastal markets, Jacksonville delivers. You're buying in a market where fundamentals, not speculation, drive values. Rental demand remains strong, vacancy stays low, and operating costs remain manageable. Insurance in Jacksonville runs approximately $4,000 to $5,000 annually for a typical investment property, roughly half what you'd pay in Cape Coral or Naples. The investment thesis for Jacksonville is straightforward. Buy cash-flowing properties in stable neighborhoods near employment centers and military bases. Hold for consistent rental income while the market gradually appreciates as migration continues. This isn't a get-rich-quick play. It's a build wealth steadily strategy that works regardless of whether Florida's luxury markets recover or continue declining. Market number 3. Ocala. Ocala emerges as a lifestyle-driven investment opportunity, capturing attention from experienced investors who recognize emerging markets before they go mainstream. This central North Florida city represents one of the most promising markets that investors should monitor closely heading into 2026. Ocala offers significantly more accessible entry prices compared to major metropolitan centers while maintaining solid growth potential and consistent rental demand. The median home price sits at $303,575, making it one of the most affordable markets in Florida with legitimate growth prospects. Here's what makes Ocala special. The city is known as the horse capital of the world, hosting a thriving equestrian industry that attracts affluent residents and creates unique economic stability. This isn't a one-industry town dependent on tourism. The horse industry alone generates over $2 billion annually in economic impact, supporting jobs in veterinary services, training, breeding, and equestrian tourism. New developments like the Shops off 80 significantly enhance Ocala's appeal. Major retailers and restaurants are choosing Ocala for expansion, signaling confidence in the market's trajectory. When national chains invest in a city, they've done demographic and economic analysis that individual investors can't match. Following that smart money makes sense. Ocala's population is growing at 2.5% annually, faster than most Florida markets. This growth isn't speculative real estate flippers. It's families and retirees seeking affordability without sacrificing quality of life. Ocala offers excellent health care through regional medical centers, low crime rates in most neighborhoods, and access to natural amenities like the Ocala National Forest. For investors, Ocala presents exceptional value. Properties that would cost $500,000 in Tampa or Orlando can be purchased for $300,000 in Ocala. Rental rates remain strong, with single-family homes commanding $1,800 to $2,400 monthly. On a $300,000 purchase price, that generates 7 to 9% gross yields. The cost per square foot in Ocala is the lowest in Florida for markets with growth potential. You're buying more house for less money, which appeals to both tenants and future buyers. As Florida's coastal markets become increasingly unaffordable due to insurance and climate risk, inland cities like Ocala become more attractive. Ocala also benefits from its strategic location. The city sits along Interstate 75, providing easy access to Tampa, Orlando, and Jacksonville. Commuters working in these larger metros are discovering they can live in Ocala and drive 45 to 60 minutes for significantly better housing value. Insurance costs in Ocala run approximately $3,000 to $4,000 annually, less than half what coastal properties pay. This dramatic difference in operating costs directly impacts cash flow and long-term investment viability. A property that's cash flow positive in Ocala might be cash flow negative in Naples, with identical rental income due to insurance alone. The investment opportunity in Ocala is clear for those paying attention. Buy quality properties in established neighborhoods at today's prices. Benefit from strong rental yields immediately. Hold as the city continues growing and appreciation accelerates. As Florida's coastal markets grapple with climate risk and insurance challenges, inland markets like Ocala become increasingly attractive to both residents and investors. Now, let me give you the specific criteria that make these three markets stand out and what you should look for when evaluating any Florida investment in 2026. Diversified economy. All three cities have multiple employment sectors, not dependence on tourism or a single industry. If one sector struggles, others provide stability. This matters enormously during economic downturns. Positive cash flow potential. With current mortgage rates and insurance costs, properties must generate sufficient rent to cover all expenses plus reserves. Run detailed pro forma analysis, including 7% interest rates, realistic insurance costs, property taxes, management fees, and maintenance reserves. If the numbers don't work at current rates, pass on the deal. Strong rental demand. Look for vacancy rates below 6% and days on market under 30 days for rentals. These metrics indicate genuine housing demand, not speculative investment demand. Check local employment growth, population trends, and major employers. Manageable insurance costs. This is critical in Florida. Properties with annual insurance exceeding $6,000 need significantly higher rents to maintain cash flow. Inland properties and those with wind mitigation features offer advantages. Always get insurance quotes before making offers. Infrastructure investment. Cities investing in roads, utilities, and public amenities signal growth. Major employers relocating to the area indicate confidence. Follow the smart money of corporations making billion-dollar bets on a city's future. Appreciation, potential with downside protection. Buy in markets where values are supported by local incomes and employment, not speculation. If appreciation slows or reverses temporarily, cash flow keeps you profitable while you wait for recovery. These criteria explain why Tampa, Jacksonville, and Ocala make our list while dozens of other Florida markets don't. These cities pass every test for sustainable investment performance in 2026 and beyond. Before you start making offers, let's discuss the risks even in these strong markets. I'm not here to sell you hype. I'm here to give you reality. Insurance costs are still elevated. While lower than coastal areas, Florida insurance remains expensive compared to other states. A property requiring $5,000 annually in insurance would cost $1,500 in Georgia or Tennessee. This affects your returns and must be factored into analysis. Climate risk exists everywhere in Florida. Inland properties face less hurricane risk, but severe weather, flooding, and wind damage can occur anywhere. Always verify flood zone status, review elevation certificates, and understand your true risk exposure. Timing still matters. Even in good markets, overpaying erases your advantage. Don't get caught in bidding wars or accept inflated appraisals. Be patient and disciplined. Good deals come to those who wait and walk away when numbers don't work. Cash flow is lower than pre-2020. With 7% rates versus 3% rates, the same property generates less cash flow today. Your expectations must adjust to current reality. $400 monthly cash flow is good in 2026. In 2020, investors expected $1,000 monthly. The market has changed. Appreciation will be slower. Don't expect 18% annual appreciation to continue indefinitely. Normalize your assumptions to 3 to 5% annually. If you get more, great. But don't need it for your investment to work. Understanding these risks doesn't mean avoiding Florida. It means investing intelligently with realistic expectations and proper due diligence. The investors who succeed in 2026 will be those who run conservative numbers and maintain discipline. While Florida's coastal luxury markets struggle with insurance costs, climate risk, and collapsing demand, Tampa, Jacksonville, and Ocala offer genuine investment opportunities backed by economic fundamentals that actually work. Tampa delivers the strongest combination of cash flow and appreciation potential. Jacksonville provides superior cash-on-cash returns for income-focused investors. Ocala presents exceptional value with growth potential as Florida's inland markets gain attention. These aren't get-rich-quick schemes. They're build-wealth-steadily opportunities for investors who understand that sustainable returns beat speculation every time. While others panic about Florida's housing crash, smart money recognizes that corrections create opportunities for those prepared to act. The key is doing your homework. Visit these cities. Drive the neighborhoods. Talk to local property managers about rental demand and operating costs. Run detailed financial analysis on actual properties using conservative assumptions. Get insurance quotes before making offers. Verify employment growth and infrastructure investment. Florida real estate in 2026 rewards discipline, research, and patience. The days of buying anything and watching it appreciate 20% annually are over. The era of strategic investing in markets with real fundamentals is here. Make sure you're subscribed to Housing Intel for ongoing coverage of Florida's real estate market throughout 2026. We'll continue tracking these markets and updating you as conditions evolve. If you haven't watched our video on the 12 Florida markets that are crashing, check that out next to understand what to avoid. What do you think about Tampa, Jacksonville, and Ocala? Are you investing in any of these markets? Drop your thoughts in the comments below. And if you found this analysis valuable, hit that like button and share this with anyone looking for real Florida investment opportunities. Smart investing in 2026 means knowing where to look while others panic. Tampa, Jacksonville, and Ocala are where the data points. Now you know. We'll see you in the next video.